The ones to watch are the banks. Jason Tyler is the Senior Vice President, Director of Research at Ariel Investments, and says he is optimistic on financial results. Joining us now from Chicago. Jason, always good to have you with us.
Good morning, Betty. How are you?
Good. And, you know, John actually had pointed out to us earlier that you're actually the second largest holder in Hewitt Associates being bought today by Aon. A 41% premium. Are you happy with the price?
Well, the news is just coming out, so I think you and John Ehrlichman know as much as I do at this point about the transaction, but Hewitt's obviously a terrific company, so it's great news for us.
Right, but we didn't make the money off of it, so. Okay, Jason, so let's move on to financial results, though. You're optimistic. You know, we had a pretty good first quarter with these banks. Are we gonna get that in the second quarter?
Yeah, I think it's split. We're finding terrific bargains out there still. It's some in the large space and some in the small space. But I think the banks that have a better normal fee income structure are going to do really well. The ones that obviously are exposed to proprietary trading are the ones that the market's going to be a lot more cautious on.
Because they're cautious about regulations?
I think that's a big part of it. But then you look at the banks that have more lending as a function of their overall revenue stream, and it looks like provision is going to lessen up as a drag on earnings. And so those good, high-quality commercial banks are going to do terrifically well, I think, over the next year or so.
Well, Jason, then where is the bad news going to be?
I think a lot of the bad news will come from firms that are very reliant on investment banking revenue. The analysts, as we all know, they tend to be late in bringing their numbers down. We talk about anchoring a lot in the past. Now, eventually, the analysts, as they bring their numbers down, they tend to overshoot. And so it's a question of where we are in that process. But my gut tells me that we're still in the stage of analysts bringing down their earnings numbers. And so there's more of a downside, particularly for some of the larger companies exposed to investment banking.
But is that the time then, Jason, to actually buy?
Well, we're finding that a lot of the firms that have investment banking revenue, but it's a lot more stable. Take a Lazard, for example, where they've got other businesses like restructuring, asset management that acts as a terrific hedge to investment banking revenue, and they've got a reasonable pipeline. Those are the firms that we're finding a terrific value in right now and are trying to add to recently.
Right. I know you've mentioned Lazard, but also Northern Trust, which is in your own backyard, you're saying is also a good buy right now. And have you talked with their management? You mentioned before that they have more faith in their brand. Is that right?
Yeah, in spending time with management recently, I don't think in the past 7 or 10 years you've seen a management team that feels better about the overall brand. They're gaining market share. They're getting great clients that they've been calling on for a long time. They feel confident that they've structured the bank around the regulatory environment the right way. Their balance sheet is absolute top in class. So to me, that's for investors that are looking for a real premium company, that's got to be top of the list.
Okay, Jason, thanks so much. Enjoy your contribution, and a pleasure to talk to you. Jason Tyler of Ariel Investments from Chicago.